Hey everyone, welcome back to Corporate Decoder. Ever wonder what happens when a company needs a big pile of cash? Well, today we are cracking open Enliven Therapeutics' latest report, and it looks like they decided to ask investors for some money. It is never that simple though, so let's see what the money is for. Before we dive in, if you appreciate getting straight insights from corporate documents, make sure you're subscribed. We also have a Discord community linked in the description below. Okay, so Enliven Therapeutics, a company we will just call Enliven from now on, made a deal on June 13, 2025. This deal, called an underwriting agreement, is with a bunch of companies like Jefferies and Goldman Sachs. These companies are acting as helpers, called underwriters, to sell Enliven's stock to the public. Think of it like Enliven hiring a real estate agent to sell their house, but instead of a house, it is shares of their company. Enliven is selling almost 10 million shares of their stock. They're also selling something called pre-funded warrants. Warrants are like coupons that allow people to buy stock later at a set price. In this case, it is for about 1.8 million shares. All these shares and warrants are being sold by Enliven to get money for the company. Each share is being sold for 19.66. The warrants are sold for a similar price, but with a tiny discount. After paying all the helpers like Jefferies and Goldman Sachs, Enliven expects to get about $216 million. That is after taking out discounts, commissions, and other costs. The deal is expected to be finalized or close around June 16, 2025 if everything goes as planned. The agreement Enliven signed has the usual promises and guarantees from Enliven. It also says what happens if things go wrong, for example, who pays if someone sues because of something in the documents. These promises were made only for this agreement, and they might have limits that the companies agreed on. It is always important to make sure all the fine print is carefully vetted. To sell these shares, Enliven filed paperwork with the SEC, the government agency that oversees the stock market. This paperwork includes a registration statement similar to a detailed application to sell stock to the public. Remember those pre-funded warrants? They let the buyer purchase shares for only $0.10. There are some rules though. The number of shares someone can buy with these warrants can change if Enliven does things like split its stock. Also, someone cannot use these warrants to own more than a certain percentage of Enliven's total stock unless they give Enliven some notice. If Enliven gets bought out or goes through a big change called a fundamental transaction, the people holding these warrants get special rights. They can use their warrants to get the same amount of stuff they would have gotten if they had used them right before the big change happened. To be on the safe side, Enliven got an expert opinion on the share's validity to make sure everything is above board. Enliven put out a press release announcing the price of the stock sale. Companies do this to keep investors informed. Enliven included a warning that some of what they say might not come true. This is because things can change, especially in the stock market. They use words like expects, plans, and believes, which mean they are guessing about the future. They remind everyone to read their official reports filed with the SEC to get the full picture. Now let's think about this move for Enliven. Why would a company sell more stock? It is usually to raise money for something specific. Maybe they have a promising drug they need to fund for trials, maybe they want to expand, or maybe they just need some breathing room financially. Whatever the reason, it means existing shareholders now own a smaller piece of the pie because there are more slices. Looking at it another way, Enliven is betting on itself. They are saying, we think our company is worth more in the future, so we are willing to sell some stock now to make that happen. Whether that bet pays off depends on how well they use the money they raise. Ultimately, this stock sale is a way for Enliven to get the resources they need. It is up to them to use those resources wisely and deliver on their promises. As always, it's up to you to do your own research, of course, and see how Enliven delivers on these promises. Alright, that's our breakdown of Enliven's latest filing. What's your take on these numbers and what they signal for the company's future? Drop your thoughts in the comments. If this analysis was valuable, hitting that like button really helps, and subscribe for more deep dives. Don't forget to check out the Discord in the description. Thanks for watching. See you next time.